Hey guys, welcome back to another week of Looking Beyond the Dividend. Today is going to be a first. This is going to be my first video where I look at a stock that I currently do not hold in any of my portfolios, nor does my wife hold. And that stock that we're going to look at today is the A&W Revenue Royalties Income Fund. What exactly is an income fund, and what exactly is the A&W Revenue Royalties Income Fund, and should you get into it? Well, stick around and we'll chat about it. Just before we get talking about A&W and their delicious burgers and famous root beer, I do have to ask you a favor though. I'm going to put a link down in the description, a link that I put out last week and I don't really seem to have gotten a great response so far from. Looking for tips from you guys on what you'd like to see as far as the items that I put on this channel. So if you could take the time to click that link and give me your input about certain ideas that I put forth and let me know if you're interested in those, I'd greatly appreciate it. So what is the A&W Revenue Royalties Income Fund? Well, I'm going to get a little bit technical here and I'm going to read you right from the website exactly as it explains. The A&W Revenue Royalties Income Fund is a limited purpose trust established to invest in A&W Trademarks Inc., which, through its ownership interest in A&W Trademarks Limited Partnership, owns the A&W trademarks used in the A&W quick service restaurant business in Canada. It goes on to say A&W restaurants, there are 854 of them across Canada, with 845 of them franchised, and the corporation owning and operating 9 locations. A&W Food Services of Canada issues a license to use those trademarks to market the root beer in cans and bottles to the retail grocery trade, as well as act as the franchisor of the hamburger quick service restaurants in Canada. So, how does this fund make any income? And more importantly, how does it pay you and I as investors? Well, the way this works is the distributions, as they're called, from the company come back to the shareholders every month, which is a very good thing, by way of a percentage of the top line revenues from the A&W restaurants that are in the royalty pool, less any interest in general and administrative expenses. As well, any of the franchisees that purchase a restaurant, there's a 5 to 6% royalty fee on monthly receipts. Now, I haven't been able to determine if that last comment ties in to the first one that I made about top line revenues. Needless to say, based on sales within the restaurants and based on sales within the grocery chains, etc., for the sale of root beer, this fund is generating income for the unit holders of the stock and paying that out on a monthly basis, as I said. So, is this stock worth investing in, or is it one that we should pass on? Well, I almost say that in every video. It depends. It's going to depend on what it is you're looking for in your investments. And after doing a little bit of analysis with this fund, I've determined for me and my wife at this point, I don't think this is something that we're going to get into. Now, you might wonder, or you might ask yourself, why would I say no to a 16-cent per month dividend that seems to be fairly stable and in a very good position? But as I've spoken about a number of times in the past, I am at the point in my investing journey and my wife and hers that we still want to see some growth within the stock base itself, as well as the income returned to us on a monthly or a quarterly basis. And this is where A&W kind of falls a little bit in meeting both of those criteria. And what I've done is I've made a little bit of a comparison of A&W to 4 other funds that we currently hold in our portfolio right now. And what I've done is I've gone back a few years and I've looked at how things have gone for the A&W income fund, as well as 4 of those stocks that we hold in our portfolio. So I'm going to just pop up on the screen right now the Exchange Income Corporation fund that we're in, Fortis, Alimentation Couche-Tard, and Severia. And what I've gone back and researched is I've looked at the stock price right on or about May 1st in 2019 and the stock price today, or the stock price as of the last close, which would have been Friday, May 5th, 2023. And as you can see there, A&W on May 1st of 2019 was trading at $43.27. And at the close on Friday, it was trading at $37.04. And that's a drop of almost 17% in stock price. Now, we've had COVID going on. Everybody's been hit by COVID. We sort of are at the turnaround in COVID, and it seems like the economy is getting a little bit better. And if you look at the three stocks or the four stocks, excuse me, below those or below A&W on the list, those stocks have all done really, really well when you compare that to A&W. Exchange Income Corporation stock price has gone up 30.95% from 2019 to 2023. Fortis has gone up over 16%. Alimentation Couche-Tard has gone up 38%. And Severia has gone up almost 22% in that same amount of time that A&W has dropped by almost 17%. And of course, I always like to look at the total return. So when we look at stock price and we see what we see there, we need to also look at the dividend or the distributions in the case of A&W and look at what they've done. So I've put those up on the screen as well. And you can see back in May of 2019 what these funds were paying out in the case of distributions for A&W and in the case of dividends for the other four stocks, as well as what those dividends and distributions are today. And it's nice to see that all of them have increased. However, A&W has basically gone from 15 cents to 16 cents over the course of 4 years. And if you look at all of the others there, they've gone up quite a bit more than that, with Alimentation Couche-Tard having increased its dividend 55%. And if you remember back in one of the other videos I did about ATD, that's why I'm so high on this, because their combined annual growth rate in their dividend has been phenomenal. And I said at that point it was something along the lines of 20 to 25%. Well, this in this range here in the last 4 years has been 55. So again, this is not to say that A&W is a bad stock or one that I would never invest in. But again, you can see the difference here, that it's a stock that's doing well. It's doing decent in its share, its distributions, not so great in its share price, but historically has done fairly well. Compared though to those other four stocks, it's just not a competition. And I guess you could make the argument that those other four stocks could cut their dividends anytime. They could also lose drastically in their share price. But that's why we always look at historical data. And the historical data on those other four companies in their stock price has been really, really solid, as well as in their dividend. Bottom line, should it be a buy? Nope, I'm not telling you. As I always say, if it's a fit for you, then go for it. I think this is a decent fund, but it's just not the right one for me and my wife at this time. And as I always tell you, this is not being investing advice. It's just my explanation about a fund and why it currently doesn't fit for me. Will I ever get into it? Quite possibly I will, at the point where I'm looking strictly for income and not for growth in my portfolio, because I'm not so sure that this is going to have a ton of growth. Anyway, that's going to wrap it up for another week of looking beyond the dividend. This week we were talking about the A&W Revenue Royalties Income Fund, and I'm so glad that's the last time I have to say it. As I always ask, if you've enjoyed this episode or any of the episodes you see, I would really appreciate it if you would consider hitting that like button and hitting that subscribe button as well. Please check out that question that I have, and we'll see you next time. Take care.